Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So in the last video that I made, I talked about the fact that we were sitting at an important resistance level right here, this 2720 level, 2730, and I talked about that this could be a potential reversal point for the rally we've seen so far. We were waiting for a sell signal though, so I was waiting for a break of this uptrend line or a break of this support zone right here, and we got none of those, so we had no signal to get short on the market. And that's what happens when you don't wait for a sell signal on the market. You are just trading against the trend, and right now the trend is up. We've got higher highs and higher lows, so we can't fight the trend. And until we have some more compelling sell signals, I'm not going to be exposing aggressively to the short side. And so far, I do maintain this support zone as a very good sell signal. If we do break past below this uptrend line and below this support zone, we're likely to see some accelerated selling towards the downside. But so far, we're still waiting on it. We've pushed past this 272, 273 level, and we're right at the 50% retracement level, going from the highs here to the lows here. I'm going to show you right now. You can see we're right at the 50 retracement level right here. For now, I still think that there is very limited upside in the markets and a lot of profit to be made to the short side. Now in this video, we're going to talk about a few things I'm seeing in the charts right now. I'm going to talk about the market sentiment in 2008 and how we are seeing extreme similarities from 2008 to what we are seeing now. I'm going to talk about the pop of the major bull market trend line. You can see this trend line right here, and you can see it has been popped. We're going to talk about how bullish that is, and we're also going to cover the likelihood of this being an actual V bottom and never retesting that low we made here during the month of March. Now before I go into the analysis, make sure to drop a like on this video. If you enjoy the content, if you're learning something new by watching my videos, don't hesitate to do so. It helps me out very much. Now what I'm going to do now is a timeline of the market sentiment in 2008 during the famous 2008 bull trap. So this is a chart showing the bullish sentiment over the year of 2008. And to this chart, we're going to add the bearish sentiment so that we can compare the two. Now, I'm going to put this chart on the side of the S&P 500 graph so that we can compare this data to what we saw in 2008 and create a timeline to help us better understand what we're seeing now in 2020. Now, this is the daily chart of 2008, and you can see this was the famous bull trap that trapped so many people before seeing huge drops in the financial crisis. And I believe a huge part of the reason for that was the market sentiment and how bullish the market sentiment got towards the top of this pattern. Now let's start on the April 17th right here. And on the market sentiment, the sentiment was bearish. We have the purple line above the orange one. And you can see this was right before breaking this downtrend line that was going from the top here. We can extend this trend line to the top all the way to here, and we broke this trend line all the way to here. And you can see on April 17th, when the market sentiment was still bearish, we were below this downtrend line. Now the next point is on April 24th. Now April 24th, we broke the downtrend line, and so you can see the market sentiment was boosted. We were in a bullish market sentiment. We were not in a downtrend anymore. Now the next data point is on the 1st of May right here, and this is when we broke above the major bull market uptrend line. And if I zoom out, you can see how significant this trend line is. We have many reactions along this trend line, and you can see right here in 2008 we broke past it, we came back above it, similar to what we're seeing now in 2020. And this was when the market sentiment flipped from bearish to bullish, because people thought this was a bear trap and that the stock market was going to see new highs in the near future. Now we all know that did not happen, and we all know that we came back below this bull market trend line, and that's when the market sentiment flipped from bullish to bearish, and we saw huge losses in the stock market. Now let's go back to 2020, and you can see in terms of price action, we're seeing something very, very similar. We have a downtrend line going from the top here that we broke, and we popped above this bull market uptrend line. Very, very similar to 2008. Now, if we watch the market sentiment, let's go back to the market sentiment graph, and we put it for 2020, you can see we do not have data past the 2nd of April. And you can see that on the 2nd of April, the bearish sentiment was very high. And let's see where we were at on April the 2nd. We were right here. We were right below the downtrend line. So of course the market sentiment is bearish as long as you are below the downtrend line, but I guarantee you that the market sentiment is much more bullish now that we're above this downtrend line, and even more so now that we're above this bull market uptrend line. And the more we remain above this bull market uptrend line, and if we consolidate around it, the more the market sentiment will turn to bullish. And I guarantee you that's what we'll see in the days to come. We'll see that the market sentiment flipped from bearish to bullish during these few days. And that can happen very, very quickly in my experience. Now, again, this is all speculative, and this is all considering that I have a huge bias because I think this is a bull trap, and that I find it very, very unlikely that we're heading to all-time highs in the coming months. And so that's the second point I want to address on this video. I put such a high weighting on the break of this bull market uptrend line, so in all logic I should be putting a high weighting on this break back above the bull market uptrend line. And I'm going to explain why that's not the case. And there are of course many reasons for this, but I'm going to state one of the big ones. If this is really a break back above this bull market uptrend line, and we're really back into the bull market, this means that we are never going to retest those lows, or at least not in the weeks to come. And the problem I have with that is very simple. Every single moment in history where we had a combination of the oversold, of the severe oversold reading we got, and such a high volatility reading on the VIX, every moment we had that combination, we had a retest of the lows. And as you know, I like to trade based off history. I like to trade based on probability. And so the probability that we're putting in a V bottom right now, I personally think are extremely low. And if I'm right, I think many people are falling into the trap of the recency bias. And that's simply because we saw a V bottom very recently in 2018. We saw exactly the same kind of price action where we had waterfall selling, a V bottom, and then all-time highs. And people think it's going to be exactly the same thing. But what people don't really understand about price action history is that these kind of V bottoms are very rare. They don't happen very often. So just because it happened in the past couple of years doesn't mean it's going to happen now. And so this V bottom was somewhat justified. I mean, we had huge drops in price for no real fundamental reasons, right? We didn't have unemployment skyrocket during this time. We didn't have an unprecedented worldwide economic shutdown at this time. And we didn't have the bond market absolutely crashing at this time. So there were reasons to get back to all-time highs. The economy was not in that bad of a shape at the time, which in my opinion is definitely not the case right now. And I know that I'm going to get an increasingly large amount of bad comments because that's the point. That's what the bullish sentiment means. The higher the bullish sentiment, the more people think we're going to go to all-time highs. And so by definition, if the bullish sentiment is high, then they won't be agreeing with me. So again, don't hesitate to drop a like to show some support. It does encourage me to stay honest about these kind of things and really say what I have on my mind, which is the way I've been making my YouTube videos so far, and I intend to keep it that way. Now, obviously, anything can happen in the stock market, and just because a V bottom like we're seeing now has never happened in history doesn't mean it couldn't form now. There is no real reason apart from probability. But again, technical analysis and trading is in large part trading to probability, and so that's what I'm trying to do. I'm obviously going to keep you guys updated as events unfold themselves in the SP 500. Make sure to comment below if you enjoyed the video. Subscribe if you haven't already. And in the meantime, good luck on your trading and see you next time.